Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day, Overtime Edition. On Monday's Stock Play of the Day, we talked about eBay. Symbol is EBAY. Today, we'll discuss, did we score or did we fumble? Hello, everybody. My name is Brian Overby. I am the Senior Options Analyst for Ally Invest. On Monday's Stock Play of the Day, we talked about eBay, and we looked at a neutral to bullish option strategy in eBay. We're showing that strategy right now in the Ally Invest Options Playbook. It's called a short put spread. Now, when we're selling a short put spread, usually the underlying stock, if we look at our profit and loss graph here, is above the strike prices. It's up in this range on when we first look at our short put spread. That means that we want the stock to either stay where it's at or go higher. If it drifts a little bit lower, that's okay, but we don't want it to drift a lot lower. Our risk is going to be between our strikes. Strike B is the one that we sold. That's the put option that brings all the risk. And strike A is the one that we bought. That's the option contract that trades for less money and gives us some protection. So between A and B, this is where all of our risk occurs. From A on down, we are at our max loss. We can't lose anymore, and we know that. From B on up, we have a limited and known upside, and we can't make any more from B on up. All right. So on Monday Stock Play of the Day, we usually tape that at noon Eastern time every Monday. So I have a 5-day chart up with 5-minute bars on it. The red line that I've drawn is actually where the underlying stock was at when we were talking about eBay. So this chart obviously isn't very good for the strategy that we were talking about on the show. But the underlying stock I have, in my notes here, it says that we were about 58.71 when we looked at putting on the short spread on eBay. This was noon on Monday, and this is a 5-minute chart. So this goes all the way to Tuesday, and this would be Tuesday's trading all day long. Obviously, we went down, and then we got Wednesday. We actually came back, got above where the underlying stock was at. But then from that moment, all day Thursday was a big down day, and right now we're fairly close to the lows for the week. Just had a little bit of a bounce back, but this is Friday's trading. So let's get to the chains and let's look at the strategy and talk about what we might do. Now, as always on this Stock Play of the Day, this is just meant to be a paper trade. We're trying to learn here. And honestly, when the underlying market goes down, we have an opportunity to learn more because it's fairly easy to know what to do on an option trade when you are profitable on it. You can just close it, move on, or maybe stay the course and try to become more profitable on the position. But the bigger question is when the underlying goes down, what might you want to do? Okay, so we see eBay right now trading at 55.01. It's down $1.30 so far today. Now, the expiration that we chose, and we talked a lot about why we were picking that expiration date, was the October 2nd expiration. When we looked at the trade on Monday, we had 39 days remaining to expiration. Now, the Ally Invest option chains highlight that this October 2nd expiration has 35 days remaining. So a few days have passed. Underlying stock has gone down. It's gone against our position is another way to say it. So if we scroll down and we look at the October 2nd expiration and we look at the strikes, we sold the 54 strike put. And then we went out and bought some protection down below the 51 strike put. And if we look at the Ally Invest workbench, we see that that is now trading for $1.05 credit. Now, we talked about this on the Monday call in that, well, if we go out further in time and the underlying stock goes against us, it actually provides us some protection. That time value, that those extra days remaining, allow us to do something with this underlying spread. If we just did a weekly, we'd basically just have to close out our position and move on. But now that we have a little bit longer time frame, that awards us the ability to do something about the trade. Now, we did talk about, well, the maximum you can make on the trade was 50 cents. So if I'm down 50 cents on the trade, I'm going to consider getting out. And so in this instance, that would be the case. It's trading for a 108 credit right now. When we were looking at the trade, it was trading at a 50-cent credit. So if we call it 110, we say we could fill somewhere by that midpoint. We'll call it 110. Well, in that instance, we'd be down 60 cents on the trade. So then the question becomes, well, if I was down on the trade, how would I exit this trade? So in the Ally Invest option chains, we'd actually click trade here, and we'd have to switch up the legs. So now instead of receiving a credit, we're going to be paying a debit. So we hit our, this is a total okay scenario in that we said, well, if we're down as much as our max gain, well, let's consider getting out of the trade. So how would I do that? We bought to open the 51 strike, so we're going to have to sell to close that strike. So I'm going to highlight that right here. And we sold to open the 54 strike, so now we're going to buy to close that 54 strike. Now, if we did that, we're going to try, we'll say $1.10, I'll put it in here. We're just going to take our comeuppance, right? We're going to say, all right, we lost on this trade. The market didn't think have the same opinion as we did. We were hoping the stock would at least stay where it's at, and we were trying to get it to break out to the upside. Looked at some technical analysis patterns, and we're kind of hoping that we could take that credit and maybe get a little bit longer eBay on the upside. But we also said that down around the 54 level, there is some support on the underlying stock. We haven't quite got to that level, but we are down what we were thinking we would close out that position at. So one viable trade here would be to just enter this trade to close and close that position overall. All right. Now, there is an alternative. You could roll. Why? Because we got time. We still got 35 days remaining to that expiration date. Now, I was looking at some of the rolls in this position, and one of the problems with the rolls is that when we roll up further in time, the strike prices get a little bit screwy. So I'm going to look at just one roll, and I'll show you how it will work. I might consider different months or different expirations, but let's just talk about what a roll would look like. Once again, we sold this one, we bought that. Here's how we would roll on the Ally Invest option trading platform. We would actually go in and we would buy the one that we sold, we would sell the one that we own, and we go out to a different expiration. And let's just go down in strike, giving us another point of leeway on the downside on eBay. And we're going to go a little bit out in time. So we're going to try to bring in a little bit more credit. We're going to add just 7 more days to this trade. But if we do this, it's going to be at one point in time, this was a net credit, but right now it's a little bit of a net debit. So we would be then selling. So we're going to go from the 54 down to the 53. And then we'd be buying the 50 strike. Now, I wouldn't mind going down another couple of trades, but just the strike prices weren't available. Once we go down below the 50 strike, well, then the strikes no longer go in 1 point intervals. So there you have it. So right now, this would be a net debit of 16 cents to the account. So what would we get by that? We're going to add our risk because we're putting 16 cents more into the trade, but we're going down 1 point, which means that now we're going to get nervous when it gets to 53 as opposed to when it gets to 54 in that point in time. But we also added 7 weeks onto the trade. So it gives us a little bit more of a buffer if you wanted to stay in the trade, but this is how you would roll that trade inside the Ally Invest platform. Now, the current options that you own would be closing. So you'd have 2 closing legs. And then you'd also have 2 opening legs on that position. So that's it for this edition of the Stock Play of the Day Overtime. Now, come back on Monday and we'll have another edition of the Stock Play of the Day. We tape it every Monday at noon Eastern time. But you might want to just click subscribe and ring the bell, and we'll send you alerts on we'll send you alerts to every Stock Play of the Day. Thanks for coming by, and we'll talk to you soon.